What's up guys, it's another video from Raymond. Today I'm going to give you an investing tip. It's going to be the first video of my investing tip series. It's called, the first video is going to be called Investing Tip 1, which is do not look at the value of your shares or the value of your portfolio every single day or frequently. The reason I say this is because today I opened my investing portfolio account on Hargreaves and Lansdown. That's the investment company I use to buy shares. I looked at my portfolio and I actually developed a thought and a realization as to how frequently I look at my portfolio, and I would say once a day or twice a day. And I've analyzed over time, or come to the realization that over time, looking at your portfolio frequently, the more frequently you look at your portfolio as to check the value of your portfolio, shows two main things. The first thing is that you may have invested too much of your money or capital in either the wrong stocks or in the stock market in general. There's a tip that's around, or common sense tip that goes around, that you shouldn't invest, or that you shouldn't put all your eggs in one basket. And translating this into the investing world, you shouldn't invest too much of your capital or too much of your cash into the stock market. That doesn't mean you shouldn't invest a lot of money, but you should invest the money that's relative to how much you're willing to lose, or invest as much cash as you're comfortable with, and make sure you still have enough money or cash to save as well as use for your personal needs. So that was a realization that I came to today, that I may have invested too much money into the stock market, but relative to how much cash flow I had. But anyway, that's just a tip for you. The second part of this tip is make sure you do research on I've already made a video. The last video I made was make sure you do research on the shares that you invest in, but not a lot of people know which research to do. So I would suggest that make sure you do research into the sector as well as the individual stocks or the business that you're investing into. But the most important thing you should look at is you should look at the track record in terms of returns or the performance of the company or companies that you want to invest into, that you're interested in investing in. Because the companies that I invested in, I invested first, and then recently, which was yesterday, I actually looked at the performance. I didn't know this feature was actually on the company's app or website. It shows you the track record over a 5-year period, anywhere from 1 day to 5 years in the track record of the company that you're interested in. You can do this for any company that's on the stock market. Actually, you can just click on the company and it shows you the track record. And this is a very important piece of information, because if over a 5-year period, which is the beginning of a long term, anywhere from 3 years and above is if you keep a share for anywhere from 3 years and above, then you can consider that long-term investing. And it shows you a maximum of 5-year track record. And if you look at this piece of information, you can actually see how well the company's done over a 5-year period. And it may not be consistent. I mean, I was looking at a company called Whitbread. It's actually pronounced Whitbread, and the performance was relatively decent. I mean, over a 5-year period, it gave about a 48% return, not on dividends, but just increase in value. But then, if you look at the different increments, for example, the company shows you that you can look at the one day returns, or 1 day increase in value, or 1 day performance. You can look at the 1 week performance. You can look at the 3-month performance. You can look at the 6-month performance. You can look at the 1-year performance, 2-year performance, 3-year performance, and 5-year performance, which is great because it shows you lots of different increments. And if you look at the results on Whitbread, it actually shows that over a 3-year period, I believe, the value of the share has actually decreased by, I believe it was either 15% or something like that. But if you look at the short term, like 1 day, it increases by like 1.25% or something. But then if you look at the 1 year, it's let's say 13-14%. But then if you look at 3 years, which is more than 1 year, it actually decreases in value, which is very, very odd. But then that just shows you that consistency and long-term investing is very good, and usually does better than short-term investing in terms of gaining value. But then long-term investing also needs to be digested, and you can actually lose value in long-term investing as well, as compared to short-term investing. But long-term investing, I would suggest, is overall the better option. So look at the information in terms of this track record, because if you look at the track record, you can actually get a gist or get an idea of how what the company's been doing over a long period of time and how well the company is likely to do in the long period of time, because you do want to hold your shares for a long period of time. So if you want to hold it for 1 to 5 years, you can actually see what the performance is likely to be. It might not give you it might not tell you exactly what the performance will be, but it shows you the past performance, and the past performance is really the only thing you have to base your judgment on, except if you want to go into complicated mathematics and this delve into the business structure and everything like that, which I will definitely recommend, and I need to start doing myself. So this is an investing tip that I've realized. It came to a realization of mine, and I hope you guys take this tip into account, because it can prevent you from investing in very bad shares, or shares in companies that have done quite bad over a period of time. For example, I've invested in Lloyds Bank PLC, and over a 5-year period, it's actually lost. It's actually lost. Actually, no. So over a 1 week, over a 1 day period, 1 week period, 2 week period, 3 month period, no 1 month period, 3 month period, 6 month period, 1 year period, 3 year period, and 5 year period. Every single increment is declined in value over 5 years, which is very, very bad. But I decided to purchase the shares. I'm going to stick with it. I'm gonna decide to stick with the shares for a long period of time, just to see how it does. Maybe it will change, maybe it won't. I mean, we learn lessons, and I hope that you guys don't have to go through the same lessons that I've gone through. Don't be lazy when investing, and yeah, I wish you guys the best. Whoever's listening to the video or watching this video, I wish you guys the best in your investing careers. And yeah, stay faithful. Subscribe if you're new to the channel, and I'll see you in the next one. Peace.